The U.S. stock market jumped nearly 900 points when Federal Reserve Chairman Jerome Powell suggested he may lower interest rates next month. That would make mortgages a little bit more affordable. However, the American dream remains out of reach for many people, especially those from Generation Z. Here to fill us in on the least and most affordable U.S. cities for housing is Sam Borghi, finance analyst, researcher at Investors Observer. Sam, it's good to talk with you. So I'm assuming New York, metropolitan Washington, D.C., San Francisco, they're probably the highest cost housing cities, correct? And are there any surprises on the list of cities with the least affordable housing?
No, you're absolutely correct. Those cities continuously rank as the most unaffordable in the country. You mainly have the West Coast and the Northeast and parts of the East Coast being the most unaffordable. We wanted to dig in a little bit deeper and not just look at just the average house price in those areas. We wanted to look at what percentage of neighborhoods were considered unaffordable. So in places like Los Angeles, for example, 97% of the neighborhoods in that city are considered unaffordable when you compare monthly mortgage payments as a percentage of a household income. So anywhere from LA down to Las Vegas, you have anywhere from 74% to 97% of neighborhoods in those cities are considered unaffordable. So it's gotten a lot worse over the last year, even as real wage growth hasn't really kept up with housing costs. And that's what we're seeing mainly across the whole country, but it's mostly pronounced in those coastal cities and in the Northeast as well.
Sam, before we get to the most affordable cities or neighborhoods, why has the cost of housing shot up so much in recent years? It seems after the COVID pandemic that housing went through the roof. Must be more than high interest rates, or is it?
Yeah, that's a fantastic question. So what we saw during COVID was they drastically lowered interest rates. And so conventional wisdom would say, well, if interest rates are lower, that means housing is more affordable. That's only partly true. When you lower interest rates, you jack up demand for housing. And as demand goes up, prices go up. That's what we saw during the pandemic. Now, fast forward to today, interest rates are above 6% on the mortgage side. The average mortgage rate is over 6%. The problem is that existing homeowners, they're not selling. So supply is constricted, which means that the available homes on the market are priced much higher. So that's what we're seeing right now. The existing home housing market is actually becoming more expensive than the new builds, which is really not something that is very intuitive to most of us. Usually new homes, they have new features, they're bigger, they're newer, they cost more. What we have now, because of the supply issue on the existing housing front, existing homes are now more expensive. So people really can't catch a break. If you're not in the housing market, it's becoming a lot harder to get into it.
And which cities are the most affordable those Americans should consider moving to if they want to buy a more affordable house?
Yeah, that's a good question. So a lot of the cities I think would really cluster around the Midwest area, especially. So Louisville, for example, is considered the most affordable because only 7% of its neighborhoods fall into the unaffordable bracket. Atlanta, Georgia, as one of the big cities, is considered one of the most affordable because 17% of its neighborhoods would fall into that unaffordable bracket. So you have cities across the Midwest. You have, Missouri, some in Michigan, North Carolina, Cincinnati, Ohio is also up there, Pittsburgh, Indianapolis, Kansas City. These sorts of cities, mainly in the middle of the country, some toward the south, the southeast, would be considered the most affordable. So a lot of those trends we already know, but we wanted to kind of dissect the percentage of the neighborhoods, and that's kind of mirrors what we see from broader affordability trends as well.
How do jobs and industry play into that? Because I know a lot of that, which you mentioned, is Rust Belt. So obviously the neighborhoods would be more affordable, but you can't get a job.
Exactly. And that's a good example because, Washington, for example, it has one of the highest incomes in the country when you look at median married couple income. So when you take a look at that, that makes it more affordable because there's a lot of jobs in that area, government jobs. You go to the Rust Belt, for example, it's still reeling from the after effects of the manufacturing downturn. So housing is much more affordable in those areas, but it's very less likely for you to be able to find work. So that's kind of the trade-off. We saw a lot of people during the pandemic, if they have remote jobs, they would move to areas that are more affordable. Those who still have that opportunity might want to consider some of the spots in the Midwest as being more affordable if they want to put down roots and buy a home.
And finally, what impact do you think lower interest rates will have on the housing market? We're probably not going to see a return to the more affordable housing levels of the pre-COVID crisis, or will we?
I don't believe we will. I mean, I think right now you have mortgage rates above 6%. I think when the Fed starts to lower interest rates and the knock on that effect has on mortgages, I think you will see rates decline. But what we've seen time and time again is when that happens, demand goes up, because Americans still view housing as a major vehicle for wealth creation. So anytime rates are more affordable, you'll start to see more activity. You'll start to see maybe more people putting up their homes for sale, realizing that equity that they built up in the home and the gains that they've seen on the property valuations, and they'll buy a new home. So I think ultimately, based on the trends that we've seen, lower rates might make it more affordable if you're entering the market, but you're also going to be contending with higher prices as well, as there's going to be more activity and more demand coming back into the market.
Okay, for now, go to the Midwest, young man and woman. Sam Borghi, finance analyst, researcher at Investors Observe. Thank you for sharing those insights. We appreciate it.
My pleasure.